Okay, guys. So today is the day 2 of our free session, chapter 1, accounting and its importance. So, guys, until others join, let's just do a recap on whatever we studied. Up to where did we study, guys? We studied up to here, or we did this as well. We studied up to here, right? Okay, so guys, now we have to start types of accounting. We have to start types of accounting. Before that, I'll just go through whatever we studied last class. Okay, so guys, now see here, when it comes to accounting, we need to know what is accounting. Accounting's definition and the objective are the same. Okay, so we say, guys, accounting is a process of providing what information to whom, stakeholders, why, so that they can make economic decision. Okay, so that they can make economic decision. So then after that, we studied, guys, when it comes to stakeholders, stakeholders are the interested parties in our business, the parties who are interested in our business. Okay, so guys, when it comes to stakeholders, there are stakeholders who are outside the business, while there are users. We say users, stakeholders, interested parties. Okay, so guys, see here, there are stakeholders, the people who are interested in our business, but they are outside the business, while there are stakeholders who are interested in our business and they are inside our business. So guys, stakeholders, there are two types, internal and external. So last class we studied, guys, the types of stakeholders. Okay, so now guys, internal, the main stakeholder who is internal to the organization, we call them management or board of directors. Okay, managers, board of directors, but employees are also considered as internal. Guys, managers and board of directors, they need information for the day-to-day decision making. They are the one shareholders. They are the one shareholders who have appointed them. Shareholders have appointed them. So that means, guys, they should make proper decision. For them to make proper decision, they need information. So then we studied employees, and then, guys, externally, the main stakeholder is shareholder. Internally, this is the main stakeholder. Externally, this is the main stakeholder. So shareholder is also a stakeholder. So guys, the shareholder will check whether the company is growing because they have invested their money in the company. So they should make sure that they see whether the company is growing, whether the company is profitable. Profitability, guys, profitability means, okay, the ability to earn profits. So is the business, is the company has the ability to earn profits. Okay, so then, guys, see here, the other stakeholders who are external are future investors, government, financial institution, trade receivable, trade payable, and external auditors. Okay. And guys, today we are going to study types of accounting. So guys, when it comes to accounting, you know, guys, you answered 3 questions. What are the 3 questions you answered when it comes to accounting? Yeah, what are the questions you all answered? What, why, and whom, right? So you all answered what, why, and whom. These are the, okay, what, whom, and why. These are the 3 questions you all have to answer. So guys, when it comes to accounting, what did you all say? Okay, I'll let you all unmute. Okay, so I will let you all Unmute. Okay, guys, can you tell me, when it comes to accounting, what are you giving? Guys, what are you giving?
Information.
Okay, information. When it comes to accounting, you're providing information. To whom? Stakeholders. Guys, you're providing information to stakeholders. Why?
Make economic decisions.
Yes, guys, to make economic decisions. These are the 3 questions you answered last class when we did this, to make economic decisions. Now, guys, when it comes to accounting, there are 2 types of accounting. Now, this is the general definition. This is the general definition. Now, there are 2 types of accounting. We say financial accounting, management accounting. That is what we are going to study, financial and management accounting. So, for these 2 also, you all should answer these 3 questions. Okay, all this time you did was accounting. Now we have 2 types, financial accounting and management. Okay, can you go through this? Just read it once, then I will start this explaining. Read it once, everyone. I know you will not understand most of the terms, but just read it. So we say, guys, financial accounting is the process of providing. Guys, it's a process. Process means it has input, processing, output, right? So we say it's a process of providing what information? Guys, before we just said information. Now what information are we providing? Financial. Financial means, okay, financial means whatever you can measure in terms of money. For example, let's say, guys, if you take the machine, the cost of the machine is a financial information. Okay, when it comes to financial, I can give an example. Cost of the machine. Guys, cost of the machine is a financial information. Let's say it's 1 million. Okay, so guys, when it comes to financial accounting, okay, so when it comes to financial accounting, you will provide what information? Financial information. Information which you can measure in terms of money. To whom are you providing? Whom? Internal people or external? External. You will provide it to outsiders so that they can make decision. Okay, financial accounting is where, guys, you will provide financial information. Guys, there are 2 types of information. Okay, when it comes to financial, and there are 2 types. Information is divided as financial, non-financial. There are 2 types of information. Financial information is where you can measure in terms of money. Okay, non-financial is where you cannot measure in terms of money. For example, I'm telling, in this business there are 5 machines. Number of machines is 5. Number of employees is 20. You understand? It's non-financial, not measured in terms of money. You get it? So guys, when it comes to financial accounting, what type of information you will provide? Only financial. To whom, guys? The outsiders. Guys, outsiders cannot come and take information inside the business, right? So every year you should give them information. So that's what we do in financial accounting. Okay, that's what we do in financial accounting. We are trying to give information to outsiders because they can't come inside the business. But even though they can't come inside the business, they should make decisions. Like customers, they can't come inside the business, but customers should make make decision whether to buy your product. What is the price of your product? Is your product better than the competitor's product? You get what I'm saying? So for them to make decision, they need information. Can you now answer me? What type of information financial accounting provides? Soon your financial information. It provides financial information. Guys, to whom does it provide?
External
stakeholders. It provides to external stakeholders. Okay, guys, why? The why is same for everything, so that to make economic decisions. To make decisions. Economic, I don't know whether I explain you guys. Economic, the word economic means the decision you make should give you benefits, higher benefits than the cost you incur. Than the cost you incur to make that decision, you should get a higher return. Correct, Shafna? You have to get a higher return. No, it's not just a decision. Because when you make a normal decision, your cost can be higher than the return. When they use the word economic, as a customer, you should make sure you make the decision where your return will be higher than the cost you incurred. Okay, so that's financial accounting. Now, guys, we'll go to management. I'll explain this part later. Management accounting, we say it's a process of providing. Guys, managers are people inside the business. So if you provide them only financial information, it's not enough for them to make decision. It's guys, can you hear me now?
Yeah.
Yeah, there was a power cut, guys. Sorry. So now, guys, see here. You see here, what I was telling is, as a manager, managers are people who are inside, right? Inside the organization. So these internal people, if you give them only financial information, it's not enough. They need all types of information to make decision. So guys, you will give both financial as well as non-financial information. You're going to give both financial and non-financial information, guys, so that they can make decision. Management accounting is only for internal stakeholders. Management accounting information is only for internal stakeholders. We say the management. Okay, guys, can you tell me management accounting, what type of information will you provide?
Financial and non-financial.
Financial and non-financial. Guys, you're going to provide both. You're going to provide financial and non-financial information. Okay, non-financial example I told, number of employees. What is the production capacity of this machine? You have bought a machine or you're planning to buy a machine. How many, for maybe let's say printer or maybe a photocopy machine, you want to see what is the capacity. So that's non-financial. You don't measure it in money, right? You measure it in number of units. Okay. So you will need to give all types of information, financial and non-financial. Okay, guys, to whom are you giving? Internal or external? Internal, guys. Management accounting information are like secrets, guys. You don't tell secrets to everyone. You will only tell to your close people, your house people. You are not going to go and tell it to everyone, right? You will tell your secrets to your close ones. So that's why it's internal. Okay, guys, see here. Why? To make economic decision. If you want, soon copy this down. Make economic decisions. If you're done copying this down, tell me, yeah? Done. Okay. So now, guys, I'm going to teach you something. See here, financial accounting, we say that they prepare general purpose financial statements. Guys, in financial accounting, this is important. Now, most of the past papers, they have tested this. What type of financial statements financial accounting prepares? Guys, we say general purpose. I didn't explain what is it. General purpose financial statements. General purpose. Okay. While management accounting, we say, guys, management accounting prepares specific purpose financial statements. Specific purpose financial statement. Okay. So this you can write a bit separately, maybe. So guys, this is the purpose. Okay, so guys, say here, what is general purpose? Guys, general purpose financial statement means you will not see, okay, let's say now y'all are, let's say I am the business, okay, I'm the company, y'all are my customers or employees, whatever. Okay, so now guys, I'm not going to choose one by one. So I am the business. Now I'm not gonna do like this, right? I'm not gonna choose, okay, for example, I say, okay, Amani, I'm not going to choose Amani as a special customer, and I'm not going to teach her separately something extra than I taught others. I'm not going to do that, because guys, all of y'all should be treated as the same. Just like that in a business, when you are giving information to outsiders, you cannot be biased. You should always be neutral. You should give everyone information where everyone will be benefited equally. That means we say we should provide general purpose. You don't see the what you will do is you will see all your stakeholders. You will see all your stakeholders and you will find what are their common needs. Common needs means what does everyone needs? Okay, what type of information all my stakeholders needs. So you will see their common needs of information, and you will prepare a financial statement where everyone will be benefited. It's not just you prepare for one particular person. You are trying to satisfy the common needs of everyone. So for the definition of general purpose, just give me 1 minute. I can give you a proper definition for general purpose. Okay, I'll show you, because that is important term in A level. Okay, I rather take it by my. Okay, so guys, see here. Are you all done writing this, right? You all done writing this, right? Okay, so I want to give a small note, okay, when it comes to general purpose financial statement, okay. So what are you doing is, in general purpose financial statement, general purpose financial statement means, guys, what are you trying to do is you will try to see the needs of all your stakeholders, and you're trying to prepare a statement on the common basis. Okay, so you can say financial statement prepared satisfy the common needs of all the stakeholders. Okay, I'll repeat it again for general purpose. Guys, write it down. Financial statement prepared to satisfy the common needs of all the stakeholders. I think I was fast. Someone
Teacher,
write
like,
it and yeah.
Teacher, like general needs, no? Like common needs. No?
Common means general. You can't satisfy like this. Now let's say out of all my students, one student only prefers another way of teaching, while the others prefer the second way of teaching. I can't teach the first way just because only one person prefers. I should see the common needs of everyone in an average way. Okay, so financial statements prepared to satisfy, okay, the common needs of all the stakeholders. Write it down. That is what general purpose means. Okay, so what you will do is you will see the common needs of all your stakeholders and you will prepare a financial statement. So guys, what type of financial statements are called general purpose? Guys, what type of financial statements you say general purpose? First of all, are you all done writing this?
Yes.
Okay, so guys, what type of financial statements? We call them general purpose. The financial statements you prepare to give it to external people, these are the financial statements. We call them as general purpose. Statement of profit or loss and other comprehensive income, statement of financial position, statement of changes in equity, and then guys, statement of cash flows and notes. I know you all never, some of the words you all never heard it because I will explain you today. Okay, so guys, see here, what are the financial statements which are general purpose? We say statement of profit or loss and other comprehensive income, statement of financial position, statement of cash flows, and guys, statement of changes in equity, and we say notes. So there was a past paper question where they gave some examples and told to say yes or no, whether is it general purpose or not. Okay, so these are the general purpose financial statement. I gave in short term because it's given in the tutor. Okay, so guys, these are the general purpose. Where will you find it? Now guys, I want to find a general purpose financial statement. How can I find it? Can someone tell me? Now I want to check dialogues because this is financial accounting. Anyone can check it. Where can I check it, guys? Now I need dialogues financial statement. How will I do that? Anyone who have an idea? I need dialogues financial statement. How can I get it? Because guys, Dialog is a company. Now Dialog should give all their financial statements, these 5 financial statements, they should give it to everyone, right? So we are also an external stakeholder. We are customers of Dialogs. So as a customer, I now want Dialog's information. How can I check? Dialog website. No man, just go to Google and type Dialog annual report, you will get. Okay, if you go to Google, guys, and just type Dialog's annual report, you will get. See here, annual report of Dialog. So guys, annual report is a document which will have the information, all the information related to one financial year of a company. See guys, annual report, they will show the content, whatever you have. See here, statement of comprehensive income. This is one financial statement, financial accounting output. See, changes in equity. What else? Statement of financial position. So these are the financial statement of cash flows. notes. You understand? So these are the financial statement. It can be a book also. No, yes, I also have a book, but nowadays I don't think they give a book because they feel like book is highly cost. Because guys, it's around 100 and like 200, 300 pages. So it's a waste of money. So they feel like it's waste. So they make a PDF or they send it to a CD. Like that only they send it now for the shareholders rather than sending a book. So let's see, guys, statement of comprehensive income, page number 79. Okay, it's a big book, but believe me, these 5 financial statements are just 5 to 6 pages. I mean, sites. Okay, all the others are additional information. But if you take the financial statement, guys, it is just 5, 6 sites, except for the notes. The notes is very huge. Other than the notes, all the other 4 financial statements are very small, just 1 page. See here, this is a statement of cash flows, just one side, guys. 365 days, all what happened in 365 days, they will just put it in one side. Okay, so then, guys, they will include all the information related to 365. I'll tell you why do they do that. Because, guys, usually financial accounting is summarized information. You will give very summarized information to your users, not detailed. That's why all the 365 days information, you're trying to make it summarize, and just give it as one side. So, guys, general purpose financial statement of any company, you can Google it and see. If you type annual report of a particular company, guys, sole trader business or partnership business will not put usually public companies only share their financial statements in the, you can Google it and see any public company, they will share it. Because just now I told, general purpose financial statements are for external stakeholders, so anyone can go and check it. Okay, so I'm a customer, I can go and check it, guys. But management accounting is like secrets of the organization, they don't share it among others. Okay, so we say it prepares specific purpose, guys. Specific purpose means if the manager is telling, please prepare this, the employee should prepare. Manager says, please prepare this report, the employee should prepare. Manager says, okay, this is the format I want to use, then you have to use the particular format they gave. Okay, so, guys, it is you prepare specific purpose. Now the manager is saying, we want to take a bank loan, can you make a financial statement to show to the bank? So you are specifically preparing a statement just to show to the bank, not any other stakeholder. You understand? We say specific purpose, you will only satisfy one purpose. Whatever the manager is asking, you will prepare that, the employee should prepare. So that is what specific purpose financial statements, only a particular person's purpose you will satisfy. Okay, so, guys, quickly go through and see if you all are clear, so I can go to the differences. So guys, I just tell you about the class details. Guys, Thursdays only you all will have classes 7 to 9. So you will be having from day after 7 to 9 p.m. Yeah, so if you want to join, you all know the Sateha college number, right? So you can make the payment and you can send the receipt to the please don't put me a message when you're sending the receipt, guys, because I have so many messages. I might not read your messages sometimes. So guys, I will send you the I'll show the number. Please make sure if you have to ask the details or anything, you can message that number. We will have classes on Thursday, guys. So please, if you're joining, make sure you make the payment before that, so you can continue you can come to the third day of this chapter. Okay. If I'm participating to your class, how can I get the tunes? When you're paying for the class fees, that's 2,200, right? You can pay an extra 1,000, then your tunes will be couriered. Okay, so your tunes will be couriered if you want, or you can come to Syntax Kolanava and get your tune. Syntax Kolanava, and you can get your tune by paying there. Either way you can get it, because if you want to courier it, the courier charges you all have to bear it, right? So if you're living closer to Kolanava, or if you can send someone, you can send it to Syntax Kolanava and take it. Okay, but better before you go, just put me a message and ask me if there is a tute, if there are tutes available, because I have given to print more tutes. So there are like 4-5. Yeah, Zainab. There are like 4-5 tutes remaining in Syntax. That's why I'm saying 7 to 9 p.m. Thursdays. If you want to go to Syntax, you can go. If you can go Saturdays, it would be better. Saturdays. Okay. So guys, that book, it's a book, guys, where you will have all the grade 12 chapters. It's just a one-time purchase, and then you can use it for whole grade 12. Okay. So yes. The fees is 2,200 per month. Okay. Okay, so guys, let's continue. So now, guys, we are going to study the difference between financial accounting and management accounting. So now, out of this, around like 4-5, you know already the difference, because we did it. Okay. So now see here, users of information. Who are the people who will use financial accounting? Now, mainly for whom are you preparing financial accounting?
External.
To internal people or external? Mainly.
External.
Yes, you prepare financial accounting information mainly to external. But guys, if you are an inside person, can you use it or can't? What do you think?
Can.
Cannot. And right, guys, if you're a person who is inside the organization, of course the manager can use it. No, without the manager checking, will the manager even tell to share it to the external people? No, the manager should check first of all. So guys, financial accounting, the main purpose is to give it external stakeholders. That doesn't mean internal people can't use it. Internal people can use it because they are like house people, for example. It's like the people who are inside, so of course they can use it. Okay. So then, guys, see here, but when it comes to management accounting, when it comes to management accounting, guys, management accounting, for whom are you preparing? Only internal. Can external people get information about the management accounting? No, it's like a secret. It's confidential. You don't give it to outsiders. Example, guys. Okay. Example, you're planning your future. Let's say you're planning to start a good project and you will have a good profit by that project. Guys, if you tell it to outsiders, your competitors quickly will start before you. Your competitors will see, he's going to start something, we will start before them. You understand? So management accounting information are mostly, guys, about the future. So you don't tell it to anyone, you keep it inside. So only internal users can use management accounting information. Okay, so then, guys, nature of information. What is the nature? Financial accounting, we say historical. Guys, historical means what? Another word for historical?
Past.
Past. Past. Historical means past. Forecasted means
Future.
future. Okay, so guys, financial accounting always talks about the past. Whatever happened in the past, if you take the dialogues annual report, they have given you information what occurred in the past. They will never tell you what's their profit in the future. They will tell you what was the profit in the past. See, revenue means income, sales income. So they have given you what is the sales income in the current year and the last year. They don't give you the future, they give you the past. So current year 2021 and last year 2020. So guys, financial accounting always talks about the past. You are going to tell your stakeholders, you will tell them, this was our last year profit, this was our last year asset value, this was our last year liability. Okay, last year liability. So you will give past information. Okay, then guys, when it comes to management accounting, you are not going to mainly, guys, what do you think? Are you talking about the past or the future? If it's management, mainly past or future? Guys, management accounting mainly is about the future. But guys, in order to plan your future, what do you need?
About
you want
past.
to, you need past, guys. If you want to plan your, for example, let's say, guys, in O levels your results were very bad. Okay, you got maybe 2 W's or something. So now you're planning to redo the O level subject and do the A levels privately. So now, guys, in order to plan your future, that is, in order to plan your A levels, the future, you should think about the past. You will think, okay, in the past I studied like this, that method is wrong, that's why I didn't get good results. So in the future I should study in a different way. You understand? So guys, you will plan your future by taking information of the past. So as a manager, you are always future oriented, forecasted, budgeted. You always think about the future, guys. As a manager, you will not think whatever happened in the past and cry about that. You will always think about future. Okay, in the past I did a mistake, I shouldn't do that in the future. What should I do to make sure I correct the mistake and not do it again? So as a manager, they are future oriented, but to be future oriented, to make good decisions in the future, about the future, they should check the past. So that's why we say management accounting is historical and forecasted. Guys, legal requirements. If you are giving to outsiders, you have to follow laws and regulation. You have to follow standards. There are accounting standards you have to follow. You have to follow formats. Guys, these formats you can't change. You have to follow the format given by the standards. You can't do the format the way you want because you're giving to the outsiders. So guys, when you're giving to the outsiders, you need to follow the rules and regulations. So guys, financial accounting legal requirements are applicable. If you don't follow, they can, guys, sue your business, or they can make sure you stop doing your company. If you don't follow the accounting standards when preparing financial statement, it can be a bad thing. I mean, they can stop you. Okay, but guys, if it is management accounting, you are not going to give your information to outsiders. So why should you follow laws? You can do the way you want. Why? Because you are not going to give those information to outsiders. So you don't have to follow any rules or regulation when preparing financial statement. That means if the manager is saying, you prepare a pie chart, we will prepare a pie chart. Graph, you will prepare a graph. Column, you will prepare a column. Whatever the format you want, whatever the way you want, you can do that. Okay. So guys, that's why we say, because financial accounting, you give it to outsiders. That's why you have to be careful. Because guys, outsiders, if their decision is affected by because of your wrong information, they can file a case against you. If you give a wrong information and they are having a big loss because of that. Okay, let's say you're having a loss, but instead of loss, you tell your shareholders you have a very huge profit. People will come and invest in your business thinking you're a good business. Okay, so because of that, they can have a very big loss. So it's not, you cannot give wrong information. You should be very careful when giving information to outsiders. As frequency of reporting, financial accounting, you will only give information once a year through the annual report. You will have an annual report like this. Through this annual report, you will give information only once a year. Only once a year. But guys, a customer cannot go to the company and say, give me the financial statement for the 3 months, for the 5 months. The customer can't go and demand. The shareholder can't go and demand. Why? Because the rule is you should just give once a year. Okay, so the company will prepare financial statement just once a year, and you should just take that. Okay, you cannot go and demand. You cannot go and demand for financial statement asking them to give you information, because guys, if it's financial accounting, external stakeholders, you just give once a year. But guys, if it's management accounting, on demand by the management. If the manager comes and tells you, prepare a report today, you should prepare. You can't say, no, wait, I will prepare once a year. That's it. No, guys, if the manager comes to the employee and asks, please prepare a profit statement. Please prepare this machine's profit. Please prepare this, that. When the manager comes and demands you information, you should give it. You cannot say no. It can be any time in the working hours, you have to do it. Okay, you can't wait once a year. Understood? But next one, guys, types of information, we did that in the definition itself. Financial accounting only provides financial information. Guys, see here, in terms of money terms, you will provide information. See, financial accounting information, while management accounting will provide both financial and non-financial. Financial and non-financial. Okay, so then guys, level of detail. Guys, when it comes to financial accounting, you will summarize as much as possible. Guys, 365 days information. You know, there are millions of transactions happening. Imagine you give all of them to the users, external people. They will not even read it, and it will be like 50 books. 50 books. Do you think they will even start to read it? No. So as an external stakeholder, you just need very summarized information. Very summarized. So you will just give the summarize. For example, the sales income. By selling goods, you have got income. So you will make sure you give what is the total income, sales income for the whole 365 days. You're not going to give one per day, what was the sales. You will give for the total year, what was the sales. Summarized, very summarized. See guys, even every financial statement, they have just given in one side. How summarized you will give. Just one side, guys. Statement of financial position, one side. Statement of comprehensive, one side. Changes in equity, one. You understand? Cash flows, one side. Why? Because you are giving summarized information. But guys, if it's management accounting, can you give them summarized information? Will they be able to make decision? No. Guys, if I tell you a story, I'm just telling you the headlines of the story. Can you tell who is right and wrong? If I tell you a story about someone, I'm just telling the headline. This is what happened. That's it. Okay. Can you make a decision who is the right person there? No, you can't. But if I tell you in depth I'm telling you, this is what actually happened from the beginning till the end in both persons' perspective. If I tell you now, can you say who was right and who was wrong? Yes, you can. Same like that, guys. As a manager, if you don't give the manager detailed information, the manager cannot make a decision. The manager needs detailed information so that they make a decision. So that's why management accounting, you have to give detailed information, while financial accounting, you will give very summarized information. Okay, guys, requirement of audit. Do you need auditors for financial accounting? Yes. Why? Because you're giving the information to outsiders. I told you, when you're giving information to outsiders, you should make sure you're giving the true information. Because if you give something false, they can file a case against you, guys. If there is a very huge big mistake, guys, it's the company's fault. You understand? So guys, you need to hire auditors. These auditors will come and check whether you have followed the accounting standards, whether you have followed the legal requirements. Okay, so that before you give it to the outsiders, the auditors will come and check whether your information is correct, whether your informations are correct. So that's why you need auditors. But guys, if something is management accounting, if something is inside the business, why do you need people to come and check? Because you're not going to show it to outsiders. So if it is something inside, you don't need an auditor to come and check whether you have recorded everything correct or wrong, because you're not going to show it to the outsiders. Last one, guys, structure. Structure means how are you going to report it? Now, if you go to dialogue, see guys, they are reporting. Are they reporting for each department? Have they reported information for each department, or are they reporting for the whole company? Are they reporting for the... Yeah, they are reporting for the whole company. They are not reporting department wise department. They are not reporting how to say branch by branch. They didn't report like that. They are reporting as a whole organization. They are saying what is the dialogue's total income, what is the dialogue's cash received amount. You understand? As a whole. Okay, you're reporting as a whole. You don't report department wise department. You will report it as a whole, because guys, remember, we give summarized information, so you are not going to give in detail. But if it is management accounting, you have to separately analyze and give information one by one for each department. Guys, if you take a company has so many departments: production department, marketing department, human resource, like that. There are so many departments. So if it's management accounting, you have to specifically say one by one department what is their profit, what is their sales, what is their cost. If it's because management accounting is detailed, guys, you understand this, and this is connected. Okay, because you give summarized information, you have to give it to overall organization. Because you give detailed information, you have to specifically give information for each division one by one. So we are done with this part. Can you go through it quickly before I go to the next one? I'll ask you all questions. Is this the first class of 2024 batch? No, this is the second class. We already had one class. If you all haven't joined that last class, guys, make sure you go and watch the recording in YouTube. You have the recording. I mean, I have uploaded it. Just go and watch it. Can you explain the structure again? Yes, structure means how are you going to report? Are you going to report or the organization as a one? You will just tell what is the sales. For the overall organization, you will say what is the profit. You understand? You are not going to say department by department. There are different departments, but you are not going to report one by one department. You will report it as one, as a whole. Okay, but when it comes to management accounting, you provide detailed information, right? So you have to report for each department. You will have to say specifically in detail. You have to mention, guys, what is the cost they had incurred, what is the income, what is like that. You have to specifically explain for each department. Get it? Now clear or not yet? Can you explain legal requirement? Legal requirement means when it comes to accounting, you will study in grade 13. You have to follow accounting standards. There are so many legal acts you have to follow. So guys, these are legal requirements. You have, when you prepare financial statement, they have given us a particular format. You have to follow those formats before preparing financial statement. But if you're giving to outsiders, you should make sure you follow. See, these are the formats I'm talking about. To prepare cash flow, this is the format you have to follow. This is how you have to write. You understand the order. Everything is given by the standard, how to write it. You understand? So if you're giving information to outsiders, okay, you have to follow all the laws and regulations. Okay, but if it is management accounting, you don't have to follow any rules and regulation. Example, guys, when you are at home, you don't have to follow when you're sitting, or maybe when you are speaking, you don't have to follow rules and regulation. But when you go to school, you can't be the way you're at home, right? So school is like external, house is like internal. Do you understand? Inside the house, you don't follow regulations, but if you go outside, you have to. Are you clear, dear? No, Sabra. Yes, Safa, you will. That is the most easiest one, Safa. In the future, you will keep on doing those questions. I mean, you will do a lot of related that, and that will be something very simple. Okay, don't worry. For now, you will feel like the words are difficult. I mean, these words, but later you will realize you have to prepare them. You have to prepare one by one those financial statements. You get it? When is the next class? Thursday. Okay, now guys, see here, I told you guys financial accounting is a process. Management accounting is a process, right? We said financial accounting, management accounting, these are process. If something has a process, there is an input, there is a process and an output. If you say something as a process, that means they will have input, processing and outputs. Okay. So guys, if you take a process, first of all, there are two: information management and financial. You all already know. So guys, what is the process of management accounting? What is the process of financial accounting? You need to know. So guys, the process has input, processing, output. Okay, so for management accounting, guys, what is the input? Historical and budgeted information. You will take your past information related to the future. Okay, to make your financial, you make your statements, to make your output, you have to take past information. I told you, you need past information. Not only that, you need future information. For example, maybe the tax rate, what will be your future tax rate, the tax percentage, like that. You need certain future information. You will take your past and future and process it. What will you do? You will take the past information, future information, you will plan with it. You will make a plan. Okay, so this is what is happened in the past, this is what's the future will be. So then you will make a plan. Okay, in order to achieve our sales target, we have to achieve, last year our sales was, okay, so now I'll say your past information is last year's sales was 1 million. This is a past information. Now you will plan. In the plan, you will say, okay, in the last year, we had a sales of 1 million. So next year, our plan is we should make the sales as 1.5. We have to increase the sales by 0.5. So now you have a plan. Okay, that's your target you have to achieve. So you have to plan, okay, to achieve this, what you should do. Then you should budget. Budgeting is where, guys, you will try to put, okay, these are the future incomes, these are the future expense. Are we able to achieve the target? Okay, you're budgeting, you're trying to, you might have heard in news and all, the government does budgeting once a year, and they provide budget of future budget. Budget is something related to the future. Have you all heard that in the news? They say they have released the budget of next year. The government has released. That is something related to the future. What is your future income, expense, profit? Then, guys, after that, you should try to control. Okay, now you have found out your future electricity. Electricity expense is going to be 500,000. Okay. You have found out the future electricity is 500, but you feel like it's too much. Now you're planning to reduce your electricity. So you have to do controlling methods. You know, in the future, your electricity bill will be around 500. You are estimating. These are all estimated, because I told you, management accountants, they always think about the future. What's going to happen in the future. Okay, so guys, now what you have to do, okay, you feel like this is what is going to happen. Okay, you have to find controlling methods. Maybe you will find two solutions where you can reduce your electricity. Find methods to reduce your electricity. Maybe use new technologies which will make sure you reduce electricity expense. You control. You know that in the future there is going to be something like this, so you are trying to control it. You understand? When you do all these three, plan, budget, control, you will prepare outputs. What are the outputs, guys? Budget statements. Now, guys, by budgeting, you will prepare budget statements. If you want, I can show you. Guys, budget statements are statements which will tell you what is the next year profit. It's about all future. Okay, it's about all future. Budget statements are all about future, guys. Will tell you, okay, what is your future income. These are not 100% correct. You're just estimating. These are estimated amounts. Okay, these are just estimated amounts. These are not 100% correct, because how can you? Only God knows about the future. How can you know about the future? But you're just estimating. So then, guys, they will prepare budget statements. Okay, in the future, we are planning to have a sales of this much, in expense of this much. You understand? You will prepare budget statements to find profit and all those. Okay, to find the profit and all those. Then, guys, another output is ratios, guys. Ratios will find the relationship between elements. Okay, the relationship between elements. When you go to grade 13, I'll tell you what these are in detail. You will study. All you need to know now is the terms. In grade 13, you will study in detail. For example, accounting ratio is chapter 13. Overhead analysis is chapter 14. Marginal costing, chapter 15. Investment appraisal, chapter 16. All these are chapter 11 and 12. So you understand, you just need to know the terms. You will study this in the future, grade 13 in detail. How to prepare them, you will study. You will study how to prepare one by one. Okay, so at now when you see these terms, you will feel like, oh my God, these are very difficult. I don't know what I'm going to do. Guys, in the future, you're going to not just study the terms, you're going to do them. You're going to do them. How many chapters? 16, totally 16. Grade 12 and 13 together, 16. Grade 12, 10. The remaining is grade 13. Okay, so guys, see here, counting ratios. These are ratios for try to find the relationship between elements. Okay, for example, guys, I can show you certain ratios just to make you all have an idea. Okay, I'm not going to teach you what are ratios because it's a chapter. You understand chapter 13. I'll just show you guys. See, these are ratios. So ratios are like equations you will do. There are so many ratios where it will find the relationship between elements. For example, if you take current ratio, there's a ratio called current ratio. It will tell the relationship between current asset, current liability. What is the relationship between current asset and current liability? So let's say there's another ratio called gross profit ratio. This ratio will try to find the relationship between sales and gross profit. Net profit ratio. It will find the relationship between net profit and sales. So remember, accounting ratios will just try to find what is the relationship between accounting elements. Okay, what are the relationship between elements? That is what you study in accounting ratios. It's a management accounting output. Then guys, overhead analysis sheet. Overhead analysis, yes, most of these ratios chapter is all of formulas. If you see here, everything, there are how many ratios? There are 19 ratios. All the formulas, you have to know them, okay, in the future. Now, so next one, guys, see here, overhead analysis sheet. Overhead analysis sheet is a sheet which you prepare. It's all future. These are all most of the time future. So some are past, but most of them are future oriented because you know management accountants are mostly future oriented. Okay, so then guys, next one, overhead analysis. Now, for example, if you want to find the price, now you want to, before you sell the product, no man, you calculate how much is the price of the product. So to find the price of the product, now you need to know, okay, for your, let's say you're producing, you're manufacturing furnitures. You're a business who manufactures furnitures. Okay, so now you need to know what is the price of the furniture. Before you sell, you have to plan in the past itself. You should plan about the future price, right? So now guys, when you're planning, so you need to first of all know the cost. To know the price, to set up price, you need to know the cost. Let's say you're doing a cake business. In order to tell what is the price of the cake you're going to charge, first of all, you need to know what is the cost you will incur to produce the cake. Get it? Same like that, they need to know what is the cost. Okay, there are certain costs which you cannot directly identify. Can you tell me, if you see a product, there are certain costs which are indirect. Can you tell me? Let's say a furniture. In a furniture, what are the indirect? Tell me guys, when you take a furniture, what are the costs which you cannot directly see when you see a furniture? Guys, can you see electricity when you see a furniture? Okay, when you see a furniture, did you see electricity? No, but guys, to produce furniture, okay, to produce furniture, you In order to produce furniture, you need a place. Okay, you need a place. So for the place, you need to pay electricity. You understand? So, but you cannot directly identifying the furniture. So, guys, these are costs. There are costs. Example, rent. When you see a furniture, you don't see rent, right? But for a furniture business, they would have rented a building and they would have produced furniture, so they have to pay rent. We call this cost overhead, which you cannot directly identify. Now, guys, how do you know for one chair how much electricity cost you incurred? You don't know. For one chair, how do you know how much is the rent? Okay, how do you know? You don't know. So this overhead analysis sheet will help you find for one unit how much electricity you're going to include. For one unit, how much rent expense you're going to include, how much overheads you're going to include. You get what I'm saying? Because you don't know what is the actual amount. So you have to estimate it. Okay, next one, guys, marginal costing. Marginal costing is for short term. Okay, this is marginal and investment all are future. So marginal costing, please write there, short term decision making. Short term decision making. Managers will make short term decision. Investment appraisal, write there, long term decision making. Long term decision making. Okay, so guys, marginal costing. In marginal costing, we will study the decisions the managers. As a manager, you're the manager. Now you have to make short-term decisions in the organization about the future. For example, what are the products you are going to produce? Okay, short-term, which is very less than 12 months. Okay, or what is the price you are going to charge? Okay, so these are short-term because it keeps on changing. Investment appraisal is where you will make long-term decision. Are you buying this machine or not? Guys, machines are millions. Okay, so it's not something small. You use it for more than 1 year. So investment appraisal is where you will make long-term decisions. Are you going to buy this building? Are you going to take this project? Is this project worth taking? So we call, guys, investment appraisal. You will make long-term decision, while marginal costing, you will make short-term decision. Okay, accounting ratios, guys. What are accounting ratios? Guys, accounting ratios are they find the relationship between accounting elements. I hope you all are writing these down. Accounting ratios, they find a relationship between accounting elements. What is budget statement? Budget statements are, guys, future financial statements. Write it down. Budget statements are future financial statements. Accounting ratios, they find the relationship between accounting elements. Overhead analysis, how to write? Okay, they calculate the overhead per unit. For one unit, how much is the overhead? They will calculate for one unit what is the overhead cost. Marginal costing, short-term decision making by the managers. Investment appraisal, long-term decision making. Clear? Have you all written everything? What is budget statement? Future financial statements. These are future statements. Okay, you prepare future profit or loss statement, future financial position, something related to the future. Okay, that's what budget statements are. Past. Yeah, Shafna. Guys, if you are preparing past financial statement, if you are preparing past financial statement, is it financial accounting or management accounting? Past. You're preparing about
Financial.
that is financial. This is past financial statement. Budget statements are future. Okay, if you I'll write the accounting ratios because you are asking me, guys. Accounting ratios, okay, they find the relationship between, okay, wait, I can give you a better one. You can write this, but don't know whether you will understand this, guys. Accounting ratios means we analyze and interpret. Analyze means we are trying to go further, because financial statements, when you just give the values, it's not enough. So you go in depth where you analyze them by finding the relationship between the elements. Okay, you will try to find a relationship between elements and then try to make decision. Analyze, and we say you interpret means you are trying to say it out, okay, about the financial statements. Or guys, if that's difficult, you can just say it finds the relationship between, okay, elements, between elements using using equations or something. You understand? Okay, just for your understanding, guys, this is not the exact definitions I'm giving, just for your understanding purpose. When you go to grade 13, you will study one by one better. Okay, so overhead analysis is where, guys, overhead analysis is where you will try to find what is the overhead cost. Calculate overhead cost per unit. Maybe you can write like this: overhead cost. Overhead cost is indirect, the indirect cost of a unit, cost which you cannot directly find. Marginal costing is short-term decision making. Investment appraisal is long-term. Are you all done? Can I ask you all some questions? Past paper. If you all are done, okay. If you all are done, I can start past paper questions. Let's do in whatever we have studied so far. Guys, soon answer me. The first two questions. I'll give you some time. Quickly get the answer. I'll send this PDF. I don't know where to send the PDFs. That's what I'm thinking. I'll try to send to the free session groups or however you all got it. Yeah. This past paper PDF. Answer the first two. Okay, let's see, guys. First answer. 2006 past paper. What is the primary objective of accounting? What's the correct answer?
Third one.
Third.
Third one.
Third.
Let's see why others are wrong. Huh? Guys, record all transaction in the books. Guys, recording transaction is in the books. These are just process. Accounting process, the financial accounting process, it's not an objective. Okay. Record, categorize, summarize, all these are financial accounting process. I would say this is right there, financial accounting process. It's not the objective. Huh? Next one. Guys, provide information. What are you providing? Information to whom? Users. Why? To make decision. All three answers are there. Information, users, decision. So that's the correct answer. Fourth one, provide financial results of an organization through financial statements. You're providing sorry, why is it wrong? Why is it
process
wrong?
of financial.
Yeah, guys, you are providing financial results. This is, guys, this is the output, I would say, output of financial accounting. But are they asking only financial accounting here? They are just asking accounting. Accounting can be both financial and management. Here they say only financial results. Only financial. That's why fourth one is not the answer. Last one, provide detailed analysis for the cost of to the managers. What is this?
Output of the
Financial managers.
Output of the management accounting.
Oh, yes, it's an output of management accounting. Guys, when you're giving an answer, make sure you know why other answers are wrong. When you say question 3 is the correct answer, you should be able to say why other answers are wrong. If not, you don't know the answer. Simple as that. Okay, to know in A levels, guys, if you want to know what is the correct answer, you should be able to say why others are wrong. Why others are wrong. Okay, so now, guys, go to the next one. Because when you know the next one, guys, next one must answer fourth or fifth? Fifth one. See, what are you providing? Information. Whom? Users. Why? Make decision. So, guys, if you take your past paper, in your past paper, the first question will be from this chapter. First question, they will ask you what's the objective of accounting, or what's the objective of financial accounting, what's the objective of management accounting, or general purpose, specific purpose. These are the first questions. Just take a past paper book and check. So, guys, see here. Answer is fifth one. Why not the first 4? Guys, record all transaction in the book. It's a financial accounting process. Yes, very good. Next one, guys, to record, categorize. Again, it's the same thing. Do you
Financial
see?
accounting process.
Do you compare and see? The past paper, it's the same. Financial accounting process again. Guys, to analyze the information presented, you're analyzing, guys, information presented. Guys, this is an output. You analyze information, guys. You can say, yes, you can say ratios, guys. Ratios, accounting ratios only you analyze. I told you accounting ratios you analyze. Analyze means you go in depth. You go further and further and further. You compare one by one element to try to find the relationship. Okay, usually analyze is done through ratios. Okay, next one. To provide detailed analysis, the managers. Output of
the management account.
Very good. Output of management accounting. So that those are not the answers. The correct answer is last one. 2014 paper. Which of the following statement best describes the function in accounting? Fourth one. Once again, guys, what are you providing? Information. Whom are you providing? Stakeholders. Why? Make decision. Correct answer, fourth. Why not first one? It measures
Process.
transactions and this is actually not a process. It's nothing. It measures transactions and events of the firm on monetary basis. This is a they are trying to say this is financial information. Financial information only you recognize in monetary basis. So the first one is financial information. It's not financial accounting. It's financial information because you are measuring in terms of money. Financial information. It analyzes financial statement for the use of managers.
Output of management accounting.
Output of management accounting only you analyze information to the use of managers, as managers are internal. Next one, to record transactions and events in the books.
Process of financial accounting.
Very good. Process of this is output of management accounting. Third one is financial accounting process, guys. In financial accounting, first of all, you should take your transactions and record them in the books. Books means the prime entry books. I'll teach you next class. We didn't study that yet. See this part. The financial accounting process. Then, guys, the last one. Provide information for the utilization of resources of the firm to its
Output
managers. Guys, you are to provide information about it can be the process of management accounting. See, like you are providing for the utilization of resources. So you can say it's like the process of management accounting. See here, in order to use the resources properly, you have to plan, budget, and then only you can give output. So you can say it's a management accounting process. You understand? So the guys, the most accurate answer is fourth one. Okay, guys, see here. We have how many questions more related to this? Okay, can you say me the answer for the 2013 one? Okay, which of the following statement best describes role of, now they are asking only financial accounting. Guys, financial accounting provides financial information to whom?
Stakeholders. Stakeholders.
No. External, be careful. Financial accounting, you should say external stakeholders. And not only external. Guys, financial accounting you can use by whom? External and internal managers. Why? Decision making. Guys, now see here, if they just give external, then now guys see here, usually financial accounting you prepare for external, okay, but internal people can use it, okay, but when you're, if they ask you to write the definition, you will most of the time say external only. even though internal can use it, your main purpose is not to give it to internal, but internal can use it. Understood? But here the most appropriate answer is the fifth one. Guys, why not first one? This is a financial accounting
Process of financial accounting.
Next one, it converts transaction into financial
Process of
statement.
finance.
This is also a process. Prepares financial statement for annual audit. Guys, it's no, it's not a process. It's actually
Output of
no annual audit. Guys, you are preparing for annual audit. Guys, it's just a legal requirement. Guys, if there is no need of audit, you will not waste your money. Auditing, you need millions. You waste millions of money. If a company wastes a lot of money for audit, it's a legal requirement, guys. If you are a company, you should do auditing. Why? To protect your external stakeholders. So it's a legal requirement. It's not an objective, not a process, nothing. It's a legal requirement. Every company should do it. Guys, last one.
Management accounting.
Management accounting. Output. Planning and control.
Process.
It's the process.
process.
Oh, yeah. How did fifth answer come? Because see here, your financial accounting, you provide information to external stakeholders, but internal also can use. Managers are internal. Why? For decision making, guys, because you don't have another answer which is more appropriate than this. So that's why we selected fifth one. And fifth one is not wrong there. Why? Because financial accounting, you provide both internal and external. But the main purpose is for external, but both can use it. That's why fifth one is correct. Okay, the last two questions for the day. Okay, let's see. Which of the following is correct in relation to primary function of financial accounting?
Third.
But correct. Guys,
Third answer.
financial accounting, general purpose or specific purpose?
General purpose.
General purpose. For whom to use? Stakeholders.
Stakeholders.
Let's see why others are wrong. You all should tell me. First one, it records transaction in the firm, in the books, accounts in monetary terms. They are trying to say,
Money.
this is financial
Financial.
information. They are trying to say it's financial information, because financial information only you record in monetary terms. Okay, it's not financial accounting process. They're saying it's the financial information you record. Next one, it prepares special purpose.
Management.
Management accounting objective. Management accounting objective. Third one, it prepares general purpose, guys. This is only financial accounting
Objective.
Okay. Next one. Let's see the next one. It provides past and future. Why does it make it wrong? The fourth one.
Management. Nature
No.
of information.
Yes. Past and future. Yes, this is management accounting, guys. Okay. This one. Annual audit. It's a
legal requirement.
It's a legal requirement. This is not an output or something. Every company has to follow. Okay, it's a legal requirement. So guys, the most correct answer is third one. Third one. Next question. What is the main purpose of financial accounting in a firm? Again, they're asking financial accounting. This first answer, it provides information to managers. Why is this wrong?
Management accounting.
Management.
It's management accounting, guys. Management accounting objective. Because they say managers. It's management accounting objective. Provide information to government.
Government.
Yeah, it's a legal requirement, guys. You have to pay tax. When you earn profit, you should pay tax. So it's something law, guys. It's something legally. You don't like it, yes, but you should. It's not an objective. People hate it. Next one, to provide information to auditors. Express an
Legal
opinion.
requirement.
It's a legal requirement. You have to have auditors. It's a legal requirement. Provide information to monitor compliance. Monitor compliance
Legal
means to see. Yeah, it's also a legal requirement to see whether you're following the laws and regulation, whether you're following the rules and regulation. You are giving information. Okay, you're giving information. See, guys, to see whether you're following the rules and regulations. So they will come and check whether you're following, are you doing according to the standards. If you're not following, they can punish you. Okay, the professional bodies, I'm talking about the professional bodies, the people who will look after the companies, they will come and check. Guys, to provide information to external stakeholders to take decision. Is this the answer?
Yes.
Yeah.
Yes, you have to provide information to external stakeholders so that they can take this. The most accurate answer is the last one. Okay, guys, let's stop it here. Let's continue the next one Thursday. If you all are continuing my class, you all can finish the next part Thursday, inshallah. So, guys, let's stop it here. I hope you all got use of these 2 free sessions. I'll send the past paper and the chapter 1. You all have no past paper. This one, PDF. Take care, guys. Good night. Study well. Yeah.